11 October 2023, Wednesday, MEO with Kel. Now, the October Almanac calls for sell for this week itself. Do you think it will happen? Well, Tudor Jones is warning, and he feels that now the geopolitical issue now is really at the most, what they call crazy stage at this one right now. So do you agree with that? And of course, we are looking at gold to rise to 1875 because we call for buy at 1813, and we believe that this time around 1875 is pretty close range. And most important, we feel that the US 10-year yield now is coming down because of what's happening in Gaza, but we believe that this is just temporary. In fact itself, right, the yield most likely be coming up, right? So a lot of things to share with you today. Let's go. All right, so before we go there and do that, let's make sure that disclaimer apply as usual. And thank you, Avens, for the kind sponsorship. Okay. Now, first of all, I want to show you some footage of what happened in Gaza, but after a while, I decided not to do that because I think the videos are kind of devastating and I don't want to bring more pain to people. Hence, therefore, I can only show you that this is very terrible. Wars is never good. So let's pray for them. And you can see that Bill Ackman also came in to talk about it. And this is really a very, very sad scene itself. This is really terrible. Let's hope that this thing will end soon. But based on what we are seeing right now, it seems like it may not do that so fast. So that's the reason why Tudor Jones issued a warning to the market and said this is the most challenging geopolitical environment that I've ever seen. In fact, itself, right, he also said that he liked gold right now, which I think makes sense. Hence, therefore, right, he believed that this is a good time to buy gold. Well, he's a guy who called the 1987 crash, so maybe we can take a look at this. And you can see right now the analysts are forecasting out of 6 major banks, 4 will see a third quarter fall. So let's see whether this makes sense. And of course, we can see right now the bull-bear spread is at the lower end. Now, of course, recently it rebounded because the market did rebound. But is this going to stop or will this continue? Well, this is going to be very interesting for everyone. Now, first thing first, I like to warn people about the China property market. So we know now, right, the country China, all right, basically failed to make a debt repayment in September. And then the thing is this now, the garden sales plummeted 81% to only $846 million. This is really crazy because Evergrande just bankrupted themselves in a way, chapter 15, okay, then, all right, 2 months ago. And now the high yield real estate is down 85% from its high. And that is really terrible. Look at this right now. The contracted sales has dropped so badly from 50 billion yuan all the way down to below 10 billion. This is really insane numbers. And imagine that as well, right? All is happening now across entire China. And you can look at this. This is really bad. The high yield real estate is down by 82%. So all these speak clearly that China is actually having big issue right now. And of course, traders need to watch. And this is the real residential property prices for China. You can see that just about a year ago, it was at higher end level, and now it has dropped more than 10%. So across the board, right? Imagine if China is not doing well, what will happen naturally to US? That's the big question here. So now the thing is this, we remember what happened in 2015, property and investment went down to 7 years low back then, and then it took about nearly 1.5 years for the market to bottom. So are we going to see the same thing? Well, I wouldn't want to bet on this right now, but traders, just be very careful. Now, one thing is that is the October month a bad month for investment? Well, apparently we know that what happened in 19 October in 1987, but of course that is really many, many years ago. But one thing to note is that now the S&P 500, we all know that there's this magnificent 7 counters that's doing very well, and the remaining 493 are actually slightly below water. And of course, for Russell 2000, they are really submerging. So question is this, why is the non-farm payroll so good? Well, apparently we know that recently the non-farm payroll figures really stunned everybody, right? 300,000 jobs. But of course, there was a research and came out that at least Americans having 2 jobs right now. So it could be Uber, it could be McDonald's, half part-time. But the thing is this, people are still not able to pay for the rental. And that's the reason why as the shelter price is increasing, we can see that inflation stays high. So one good question is what will happen very soon? So now this is the almanac, right? I think there's some issue here. Let me just correct this. Give me a short moment on this. Give me a moment here. Okay, let me just bring it up. Wait. All right, so this is the October market performance for 2023 based on the last few years. And you can see right now, right, usually the first start of the year, which you can see over here. Let me just bring to you my annotate here. right? At the start of the year, usually the market will do pretty okay, all right, pretty decent, all right? And then after that, what happened? Okay, then that is where from the 13th to 16th of the month, we will see the market turning the other way around, taking profit. And then after that, we should see some selling. So of course, we had a worst time ever on 19 October. That was back in 1987. But again, this is something that we are talking about since 1950s to all the way here itself. So overall, one thing to note, but one thing is that if you look carefully, by the 20 to 23 of the month, that is where the market will usually bottom out. And as a matter of fact, across the board itself, right? Generally, the last week of October, the market will be kind of positive. So that is something that I kind of suspect it may happen unless we have some serious devastation in some part of the world. So if you look back now into history, you can see that, right, since 1930 until to date itself, right, the October numbers are pretty decent. Now, so August, September, we saw some selling and it really came, we saw that. Now in October itself, right, it seems quite good. And in fact itself, right, it's the same for November and even for December. So if you look at it overall, expect we could actually see the market performing well in the last quarter of the year, but that is based on the Almanac, right? So if let's say that things happen, there's some crisis happening, all these can be different, but at least for now, we know that this is possible. Now, one thing to note is that the hedge funds are continue adding their shorts in the US treasuries. Now, why are they doing that, right? You may ask this question. Well, because basically we all know that the Federal Reserve has to find ways to bring down inflation, and one way is to increase interest rates. So if inflation continue goes higher, then naturally it's our interest rate had to stay high. And because of that, right, it will add a lot of pressure on the treasuries, because treasuries, the price itself and the yield go in the inverse direction. So right now you can see that the 2-year bond is heavily shorted by the hedge funds, while the 10 years is also coming down. And if you look at this right now, right, there's a large 2 weeks outflow from consumer funds from the banks. Okay, the banks, people are getting themselves out of the banks now, because probably what I just said earlier, it could be due to the third quarter result may not be fantastic, and of course the money market now is really very attractive at almost 5%. So people are getting the money out from there and put into this money market. So 5%. So why not, right? So the thing is this, then why the market rebounded recently? Well, because we have people like this Fed Vice Chair, Philip Jefferson. He came in and said the real long-term yield have risen significantly. Maybe it's time to look at it again. So in short, it's trying to tell people that maybe the Federal Reserve need to really turn a little bit dovish right now to consider pausing rate for a longer period of time instead of even looking at a rate hike. And because of that, immediately the bond market recovered. That was what happened last 3 days. Heavy volume was traded. The bond market recovered from near 84 to 86 level. That was a big move here. But in my opinion itself, this may not sustain, all right? To me, it's all right. We have to watch this carefully. So one thing to note is like look at RSI regarding the 10-year yield. You can see a very important significant here. Let's take a look. Now, every time the RSI basically comes to 50 mark, you can see that that's where it meets a moving average. And when the yield came down from the top, after a while of support, it will have to move higher, right? So pretty cool. So it happened again back in September where the RSI came to 50, the price came down, touched the moving average, bang, it went up. So if you'd ask me right now, is it possible to see that this happen and let the RSI be touched again, then it stays at the moving average before going up again? Well, I think that this is really possible. Now, of course, why the yield is coming off is because right now people are saying that because of what happened in between Israel and Gaza. So that's why now people are buying into the US treasuries for protection's sake. But to me itself, it's seriously a lot of BS at this moment. It's more like there's nothing else to buy. So people just buying something that makes sense and give us guaranteed profits, right? So we all know that US will never deficit their bonds. They'll print money to make sure they can pay people. But the point is that, of course, the US dollar will be affected. But at the moment right now, if you ask me, the yield to come back down for technical reason is very high. And if that happens, it's all right, this will be a great time to basically short the stock market. So at the moment now, as long as the yield is coming down towards the technical point, then of course the stock market may go up further because the market now is watching the yield very closely. So all this information is out. You have to consider all this before you trade into the market. Yeah. And the thing is this right now, people have been asking me, Kel, then when can we see a stock market rally? Now, I think before we talk about rally, let's talk about the unemployment first. Now, let's take a look here. This is the S&P 500 versus the unemployment numbers. Now, you can see very clear, almost every time the unemployment data has to go up first, then the stock market can rally. But before the stock market rally, you can see that the stock market must nosedive first. Now, why will stock market nosedive because of that? It's pretty simple. When people are losing jobs, that means recession is kicking in. That's why the stock market dropped. So at this moment right now, we do see a little bit of a recovery or blip up on this unemployment numbers, not recovery, more like is increasing in unemployment. And then the stock market is, well, seemingly sideways at the moment right now. So if, let's say, due to whatever reason, you have a sudden surge of unemployment data, then of course the stock market will have to come down. And when that all happens itself, then be ready, because it has proven that whenever unemployment data really goes up, the stock market will bottom at some point, and that will usually be the start of the rally, which I think that's whereby Federal Reserve will cut interest rates so fast, so dramatic, and then it's back to the easy money market again, and of course they add trillions of dollars into the balance sheet, which they don't really care, and then the stock market will recover, because we know that US right now is a market whereby they are owing $33 trillion in money, but the stock market is the strongest so-called at the moment. So with all this information, it's pretty clear that we are having this momentum right now where the inversion is actually recovering. Now, remember, I covered this before. Once the inversion recovers, that is where usually the unemployment data will also go up. Now, this has been proven in a way. So now the thing is this, once the inversion is coming in, when the Federal Reserve is pulling their stocks away and telling those, look, you know what, we need to just come down and maybe let's not increase any more interest rate, this is where the fear will come in. Because why? That means that the banks will tighten up, the banks won't lend people, and the small businesses will start to find difficulty for cash flow to cut away people's job, or people will know that their job is in a very critical position. They must find an external job like a part-time. All these will push up unemployment. And when all these things happen itself, you can see that the repercussion will be on the stock market. So right now, the S&P 500 last night misses the moving average 30 just by a hairline and then pull back. So I suspect that it will go and test this again later. But if the market fails to stay above the moving average, the market can fall back. All right, the market can actually fall back. So let's watch this MA30 closely. If not, the fallback chance is very high. Now, before we go, I want to show you my TWB chart. Now, this is S&P 500 chart. As you can see, the last 4 days, the funds were buying, the boys are buying. So that's why we also went long into the S&P. The only thing is this, my KRW, which is basically the calculation of the movement of the market in the intraday, is still displaying red color. So that tells me that, I must be very careful with my buying. So buying is not wrong, but just don't need to go all in. And in fact, it's all right. Wait around some profit level. I think we may see some at around 4400 level if it does really goes higher. But of course, if the market breaks below 4300, then selling will come in. But this one, we put it aside first. The one that is most important is gold. Now, remember, when gold came down to this price, 1813, we already tell a lot of people to buy some gold, and I'm glad you did that. You can see now my indicator, my boys indicator, my KRW, both of them are positive, and the KCX is retracing its negativeness. So overall, I believe that gold will likely be coming to this point here, which is 1875. I think gold will come to 1875, and then that will be a great time to take some profit, because I suspect that after that, the yield will come back in again, and this will push back gold down again. All right. So let's see whether I'm right or wrong, and let the market decide. Yeah. With that, I end today's MAO. Thank you so much. Please like, subscribe, and share with your friends. It's Kel signing off. Take care. Have a great day. Bye-bye.